with interest rate still very high, many investors are struggling to find investments that can bring positive cash flow. And I've noticed that student housing had came up quite a lot in the conversations we've been having with our clients because it provides usually a positive cash flow. However, this category of investment seems to be the least understood. Hi, my name is Ali. I'm the co-owner of Home and Capital Realty. We have been committed to helping clients buy and sell homes for over a decade, delivering expert guidance and exceptional results every step of the way. And today, I'm going to break down why I would not be investing in a student housing in the current market condition. All right, student housing is actually a full-time job in disguise. So most students are not exactly pros at maintaining a property. They're not going to fix a leaky faucet or handle that mysterious stain on the carpet. This often leads to extra wear and tear, not to mention the dreaded midnight phone calls. The toilet is clogged again, the heat has stopped working, my roommate ate all my snacks, can you do something about it? The list of repairs and complaints and disputes can feel like never ending. And suddenly your passive income starts to look like a full-time job that you did not sign up for. And if you're somebody who thrives on fixing things at all hours of the day, then by all means, but this is not for the average investor. For most investors, the dream is hands-off income, not to become an official, or I should say unofficial, resident advisor of the house. At the end of the day, you're invested in real estate for the passive income and not to work 28 hours a day. It can be very challenging to secure financing for student housing. So a typical student housing setup usually involves a single-family home, whether it's a townhouse, detached home, or a semi-detached home. Landlords often try to convert every inch of available space into a bedroom because more bedrooms equals more rent. That's great for your cash flow. But here is the catch. Lenders tend to classify these type of properties as rooming homes. And that's where the trouble begins. Why do lenders have a problem with this? Rooming houses, by definition, involve renting out individual rooms. Lenders see this setup as high risk because it's outside of traditional single-family rental model. And as a result, many lenders would outright refuse to finance student housing. The lenders that do consider financing often impose strict conditions, higher down payment, higher interest rate, tougher underwriting criteria. And here's the part I personally dislike: putting down a bigger down payment. Let's break it down. When your rental income and price appreciation stay the same, but you're putting more cash into the deal, your cash-on-cash return takes a hit. Or in plain English, you're making less money on your investment for every dollar, or I should say every extra dollar you put in. I'm gonna have a separate video explaining how I calculate ROI for investment properties. And don't worry, I will save you from the math lecture for now and keep the video short and sweet. So the bottom line with student housing, you can't fully leverage the magic of real estate financing. And let's be honest, leveraging financing is what makes real estate investing so profitable, exciting, and to be honest, unparalleled. And by the way, I might be a little bit biased here, but anyhow, let's move on to the next point. Strict municipal bylaws make student housing a high-maintenance, low-reward investment. So in recent years, more homeowners have been complaining to get student housing out of the residential neighborhood. And there has been a rise in noise complaints, overcrowding in these homes, and parking shortage on the streets. So all of which are putting pressure on the cities to crack down on student rental. And from an investor's perspective, these bylaws create a lot of challenges. Many cities have zoning restrictions now that prevent student housing in certain neighborhoods, which means fewer options for where you can buy. On top of that, meeting safety and licensing requirements often involve costly upgrades. and permits. And here, we're not talking about cosmetic fixes. In most cases, these are major structural updates need to meet the city standard. And if you don't comply, you could be slapped with hefty fines, face a forced shutdown, or, God forbid, in extreme cases, even having to deal with criminal charges. Market is moving away from the makeshift student housing to new purpose-built student condo apartments. So the student housing game have really changed. Universities and private developers are now building these purpose-built housing loaded with modern amenities. Fitness centers were student lounges, basketball courts, theater rooms, and many of these are even fully furnished. And students are loving these type of setup. A brand new built with all the bells and whistles versus an old converted basement bedroom. It's easy choice for most students. So the shift in demand means that traditional rooming house or the student housing model is really quickly losing its appeal. The reality is, market for older makeshift student housing, it's shrinking, and is shrinking dramatically fast. We are actually already seeing a higher vacancy rate and lower rent. Student housing near universities may have been good investment a number of years ago, but time have changed. The challenges of time-consuming management, financing difficulties, and increased competition from modern purpose-built developments make it a demanding and high-risk option. Do you or anybody you know own a student housing or a student rental investment? What has your experience or their experience been so far? Are you seeing the same challenges and risks as we are? Please leave a comment below. We would love to hear from you.